Welcome to the HBR IdeaCast from Harvard Business Review. I'm Allison Beard. How do you, as a company or individual, figure out when it's time to start paying attention to a new technology? How do you tell whether it's a flash in the pan or something that will actually go mainstream? How do you learn about it? When do you invest resources? And how do you predict the impact it will have on your business? For many of us, there's a temptation to dismiss the latest thing. It's too niche or a passing fad. But as anyone who studies business knows, those who ignore important innovations tend to get trampled by them. Companies can reach a point of no return where their unwillingness to adapt spells disaster. Today's guest says that cryptocurrency might just be one of those key developments that we all need to embrace and understand as soon as possible, because it and the blockchain technology behind it will fundamentally change the way we do business. Jeff Roberts is the author of the new book, Kings of Crypto, one startup's quest to take cryptocurrency out of Silicon Valley and onto Wall Street. He's with me now. Hi, Jeff.
Hi, Allison. Thanks for having me.
So cryptocurrency, Bitcoin, altcoin, blockchain, these are terms that many business people hear and their eyes kind of glaze over. You know, they find it too complicated to learn about and understand. Are you able to give me just a simple explanation of what cryptocurrency is and how it works?
Sure. Yeah. And I think all those executives are totally in their right to have their eyes glaze over, because too often discussions of Bitcoin and blockchain are put forth by people who fetishize it or have a financial interest in it. But the reality is it's quite simple. I mean, let's start with Bitcoin. Bitcoin is simply software. It's a software you download to your computer and it keeps track of who owes which money. And the innovation of Bitcoin is the underlying technology is blockchain. And the blockchain simply provides a tamper-proof transaction record of where the money has moved around. And it allows any computer to verify that and to post a public record. So that's what it is in essence. You hear a lot of jargon about, wallets and digital wallets and transfers and stuff, but essentially it's just a software program that shows who owns which assets.
And Bitcoin is the most popular cryptocurrency, but there are many. So explain that fact, the proliferation of numerous types.
Yeah, just as, once upon a time, there was just a handful of apps, but the underlying technology of iOS and app stores were universal. In this case, Bitcoin was the first major cryptocurrency and also the first widespread use of blockchain technology. Since then, however, many other currencies and other applications have borrowed the underlying principles of blockchain, which once again is simply the ability to create an instant tamper-proof ledger of transactions. And so there's now hundreds of cryptocurrencies, and then blockchain technology is also used for other applications that don't relate to money. But still, to this day, Bitcoin is by far and away the most valuable, the most important one.
That blockchain ledger that you're talking about, who maintains it?
I mean, that's the radical innovation of it. Is it's maintained by thousands or tens of thousands of computers around the world, so that that sort of collectively everyone keeps up the ledger and proves that yes, this transaction did indeed happen. Allison paid Jeff, there's a transaction, and the blockchain can be viewed by anyone. If you're really into this, you can go to a site called Blockchain Explorer, and that's where every transaction is posted and you can confirm it. But the people maintaining it is a decentralized network of computers all over the world. But the fact there's so many computers that have to agree on what the ledger says, that's what sort of provides the tamper-proof, permanent, reliable technology underlying Bitcoin. This gets a bit arcane, but the reason Bitcoin works is if you decide to lend your computer to this mining effort or to this keep maintaining the transaction, you're also doing something else. It's what the kind of computer geeks call mining. And every 10 minutes, the network issues a new Bitcoin, which, as on the day we're talking, is worth $19,000. So it's worth it to participate in it. Once upon a time, this was just people on their home laptops doing this. Now it's more like industrial conglomerates that have major computers to keep up with the network. network. But that's why it works, is there's sort of a selfish interest. If you participate in this network and maintain the ledger, you can get a reward in the form of a Bitcoin, which is issued every 10 minutes. But I should add, for private systems like Facebook's money or central banks, you're not going to really need this decentralized network. You're going to deputize, sort of a few dozen trusted people to maintain the ledger with each other.
And the thing that makes Bitcoin so secure is that to get it in or out, you need a personal number, right? And if you lose it, that's it.
Right. And that's, sort of the more esoteric part of Bitcoin is if you want to sort of be one of the sort of OG people, you have your own key. You've got a public key and a private key. These notions are familiar from cryptography, but basically to hack my Bitcoin wallet, you would need a quantum computer, which doesn't exist yet. But what most people do is they rely on a service like Coinbase or Gemini or one of these other services that provide Bitcoin for you. And for Bitcoin purists, they're like, oh my God, not your coins, not your keys, you're relying on the man. But for practical purposes, this is the easiest way to do it.
And companies do the same?
They have a situation where, like, when Square bought $50 million worth of Bitcoin, they're not going to simply leave it, on a USB stick in a drawer. There's now a growing number of custodians in the same way, like there's an industry. If you have stock certificates, you have to store them somewhere. If you have gold bullion, someone will store it for you. Now there's, a growing number of companies, including Coinbase, but some other ones whose whole shtick is just simply to secure it. But, as the industry gets more sophisticated, there's now ways devised to, require 5 different people to supply the key. I don't know if you know what, like, the Horcrux from Harry Potter is. Mm-hmm. It's basically like that. That's what professional companies do.
And what's the lay of the land right now? Who are the big players in cryptocurrency, since that's the primary use of blockchain right now? And how is it being used?
Well, for the longest time, Bitcoin's been around for more than 10 years now, and has primarily belonged to the sort of true believers and the ideologues, the sort of people who make your eyes glaze over. But increasingly in recent years, you're seeing mainstream players take an interest in Bitcoin. In the past year, you've seen Square, the big payments company, buy $50 million worth of it. PayPal's now providing it to everyone. And then meanwhile, on the financial side, you've got hedge funds, big investors, including, Harvard and Princeton University, now own Bitcoin as part of their endowments. So as a sort of an investment, Bitcoin has really kind of become the gold standard in cryptocurrency. And there's a big movement afoot to have people buy Bitcoin instead of gold as sort of a permanent store of value. And some people think this is silly, some don't. But the reality is, in the top 5 stocks bought by millennials last year, Charles Schwab did a survey. And, unsurprisingly, you see Apple, and I think Netflix, but also in the top 5 is a Bitcoin stock. And this reflects, I think, a younger generation's embrace of software-based cryptocurrency as an asset to own, because it's simply easier to own than gold is. Governments and regulators are getting more friendly to it, which means it's sort of a less existential threat to Bitcoin being wiped out. And meanwhile, even banks like JP Morgan CEO Jamie Dimon's a famous skeptic, but now JP Morgan is providing banking services to Bitcoin companies. So we're really quite a ways out than we were even 3 years ago when there was a bubble last time around.
And so why is right now a moment that business leaders, managers, not just investors, should know more about crypto?
Well, I think you always have to stay up with new technology. 15 years ago is apps. Some people wrote those off as a fad. And then maybe 7 or 8 years ago is cloud computing and AI. And these, as with those technologies, there's a ton of buzzwords and hype surrounding them. But the reality is, now AI, cloud computing, and apps are part of our business life. And likewise, the same revolution is sort of underway in the financial sector, of the sort of the plumbing that supports it. And blockchain is just such a superior technology to what went before that people can't ignore it anymore. They might not like Bitcoin, they might not like cryptocurrency culture, but the underlying technology is not going to go away, and it's being embraced by more and more people. And let me just add one more point else. And the reason it's so superior is because you can verify a transaction nearly instantly. Right now, to move money around between central banks and big banks, or even at home if you want to wire money, it takes 3 days and is a cumbersome technology built on, something created, I think, in the 1960s, the SWIFT system, which is a messaging system between banks, but it's a very antiquated one. And right now, blockchain technology is sort of poised to displace that. And you can see that in central banks. China is unrolling this. I think their thing is basically live, the digital version of the yuan. The Bank of England, Bank of Canada are doing it, and even the U.S. Treasury's exploring how this is going to work. And finally, I should add that MasterCard has got a giant program to help central banks disseminate currency using blockchain. So this isn't going to go away. And I think business executives need to at least understand the bigger picture of how blockchain works and the role of cryptocurrency within that.
And so even outside banks, financial institutions whose job is to move around money and currency, retailers need to understand this. Manufacturers need to understand it. Sort of every industry.
Exactly. Yeah. And I mean, there's the reason why a lot of the corporate sector is jumping in is because there's a chance for huge savings. Relying on the SWIFT system and moving back money across borders is really painful. Blockchain is going to eliminate a lot of that. And that's why you're seeing Facebook. They're trying to roll out something called Libra, which is the global cryptocurrency, sort of a private form of money. And I think we can expect Apple, which is really well poised to do that. They're on the cutting edge of payments. They have a very good reputation for privacy. So if they can simply issue a blockchain-based money, they haven't said they will, but I think it's a pretty safe bet in a couple of years they're going to be doing exactly that.
And so rather than Bitcoin or other decentralized currencies dominating, it could be in the future that the digital yuan or the digital dollar is what's running through the system?
Exactly, because it's a lot more flexible to push out. Like, for instance, if we had this during the recent push for stimulus money or PPP loans, it would have been a lot easier to administer. There would have been less fraud. They would have distributed a lot more quickly. And so that's why, central banks around the world are experimenting with it. In the case of China, there's a dark side, though, too, because since all these currencies are traceable, China's a surveillance state run by a totalitarian government. So, there's a risk in that. Do you really want the Chinese government seeing exactly what you spend? The nice thing about cash is it's quite anonymous. Whereas if we go fully digital, there's sort of a risk of, surveillance. But I think Western democracies and companies are working to build versions of this that will provide some anonymity.
What are some of the other risks and downsides that have made business leaders, many just individual people, hesitant to embrace this trend?
Well, I think in the case of Bitcoin and cryptocurrency, is its first use was criminals. That's not unusual for the web. I mean, pornography is what built a lot of innovations in payments and streaming technology on the internet. And likewise, Bitcoin was and is instrumental to a lot of illicit transactions. But, people who argue in favor of Bitcoin argue, and I would say correctly, that, look, $100 bills, Mexican drug cartels love using American cash. Apple gift cards, Amazon gift cards, any of this stuff can be used illicitly. But in the case of Bitcoin, a lot of the early adopters were criminals. That's not really the case anymore. So it's gone mainstream. So the reputational risk is declining. Hacking is still a risk, especially if you're dabbling in one of these sort of newer, more exotic cryptocurrencies. You don't know, if someone manipulating behind the scenes can be hacked. But in the case of the most established one, Bitcoin, at this point, the network's pretty bulletproof.
What about the crazy volatility that we saw in the first decade from these decentralized digital currencies? I think that's what made it seem much more suited for speculative investors than legitimate businesses.
I think the same, the volatility is still there, but much less so. The first big Bitcoin bubble, the price went to $30, then plummeted to $2. And ever since, there's been these boom and bust cycles, most recently in 2017, where it hit almost $20,000 and fell to 3,000. And that was sort of a wipeout of about 85%. We're heading into another similar bubble. But one thing that's been constant is every time it crashes, the crash has been less dramatic than the previous time. In the case of Bitcoin, some of the other cryptocurrencies are completely worthless. Some are not. Currencies like Ethereum are going to be part of the future. but the volatility is still there. So as an investor, but the same way people invest in emerging markets, you can get a higher yield, but a higher risk. The same is with cryptocurrency. And a growing number of people are saying, okay, start dedicating maybe 2% of your portfolio to crypto. It's going to be volatile, but in the long run, it's probably a good idea. And in the case of Bitcoin, I think it's hard to argue that over the long term, it eventually goes up again.
What about for corporations, though? What percentage of their resources should they be investing in crypto, blockchain right now?
Well, I think that's a question of treasury management, which is above my pay grade. Companies like Apple and Google have so much money, and they issue bonds, and they put it into money markets. So I know Square simply decided to invest $50 million into Bitcoin because they think it's a good asset to invest in. A handful of other companies are doing the same, and I think we'll see more of that. But that's probably I think a mainstream company, like I don't think you're going to be seeing Walmart or Nike doing that, but financial companies I think increasingly will. But while doing that, they do have to pay attention to how people are paying. The transformation of payments of the pandemic has accelerated. People already were moving away from cash, but now people are actually afraid of cash because cash is dirty. The adoption of digital wallets is taking off exponentially, and it's going to continue to do so. And those wallets will be tapping into things like the Visa and MasterCard networks, your bank account, but increasingly into cryptocurrency. Next year, PayPal is going to let any merchant let people pay with Bitcoin and convert it instantly to cash. So this is part of the sort of payment plumbing that's going to be here for good.
And you talk about Bitcoin, cryptocurrency, the blockchain also as a means of financing corporate endeavors. So talk a little bit about that trend and how you see it developing for startups, but maybe also more established companies.
That's where it's going to get really interesting. The company I write about, Coinbase, which is in North America, at least, the first on-ramp. If you want to go to Bitcoin, get Bitcoin, that's probably where you're going to go because it operates a lot like online banking. And they're the sort of oldest, most respected and most sort of, regulatory sound company. But if you want to push further out, blockchain technology is, the people I talk to say that the way companies issue shares is in the future going to be on a blockchain, because it's going to be cheaper and more efficient. The current IPO mechanism involves a lot of clearing and waiting a day for stocks to change hands and stuff. If you can put this all on a blockchain, like companies like Coinbase want to do, that's going to make stock trading and clearing a lot faster and cheaper. So what's going to get really interesting is where Coinbase goes public. What they want to do is issue tokens on a blockchain as part of their offering. Just as, when, Airbnb goes public, they issue shares, and there's a bunch of Wall Street clearinghouses that control those and keep track of them. If you can do it on a blockchain, it's a lot more secure and efficient. And that's, I think, what's going to happen. But I think the SEC is still getting its head around that.
Yeah, so let's talk more about regulation. How are regulators around the world approaching both cryptocurrencies and this idea that blockchain can be used for so much more?
I think the smart people at central banks really understand the technology's potential, but also, put these central bankers work hand in glove with treasury departments whose job is to police money laundering and crime, and those enforcement agencies, from the IRS, the FBI to the Treasury, for very good reason, are watching how Bitcoin and cryptocurrency is being used to launder money and facilitate criminal payments. So we're going to sort of see this tension play out where they're going to ramp up the enforcement, which is a legitimate thing to do, while also embracing the technology to have the benefits of it. But, as before, the internet itself, at first was a haven for crime. Companies and eventually governments realized this technology is too useful and too important to reject. So they've come around to facilitating its legitimate use. And we're going to see the same thing, and are seeing the same thing in the case of cryptocurrency and blockchain.
And what are the macroeconomic, geopolitical implications of all of this? You mentioned that China is developing its own digital currency. So what does that mean for international business and competition?
That's a very big question, and one that's slightly above my pay grade too. But the short of it is turns around the U.S. dollar, which is the globe's reserve currency, and which is an immense benefit to the U.S. right now. The U.S. is sort of one of their along with the military, America's most powerful asset is the fact that everyone across the globe settles their transactions in U.S. dollars. China, who's a geopolitical adversary, is trying to undermine that in part by deploying digital currency, which is a lot easier and more efficient to use. So their digital yuan is a safe bet that for their Belt and Road Initiative, where they're cooperating or coercing other countries in Latin America and Africa, they're going to start pushing for those countries to start doing settlements with the digital yuan rather than the US dollar, with the long-term goal of undermining the greenback status as the world's reserve currency. And very smart people at the US Treasury and at the Federal Reserve are aware of this and are trying to figure out how to encourage the innovation that goes with blockchain without giving up the primacy of the US dollar. I do know people in the top of the Treasury and even in the military are watching this because the threat to the US dollar is a threat to the US. So that's the kind of greater geopolitical game underway.
Everything that you're talking about, the fact that sort of most companies need to understand this better, governments around the world need to understand this better, but it remains this very niche field. Is there a worry that there's not enough talent to make it all happen? Are people fighting for cryptocurrency experts, blockchain experts?
Yeah, but I think again, it helps to see it through the prism of earlier hype cycles. Remember AI, which still is a buzzword, and companies were raiding university, departments to hire their professors. Likewise, cloud computing. When I first started covering Bitcoin in 2013, it was still, most government officials didn't know what it was. People in universities didn't know what it was. A couple of protagonists in my book, one of them tried to write his master's thesis on it, and his professor actually at Harvard Business School said, no, don't do that because this is a fad. And that was in 2014. Now, universities across the country have blockchain courses in different departments, in economics and sociology, in business schools. And so the talent pipeline is certainly coming up. And in my covering of Coinbase, they said increasingly people applying to work there, the resumes say JP Morgan and Goldman Sachs. So it's just, I think, a generational shift as more of these courses go online, more business school students embrace it. There's now fintech clubs at Penn and at Columbia and everywhere else. So, I think this is here to stay, and the talent to build it is coming online every day.
What do you think are the biggest growth areas for cryptocurrency and blockchain in the business world going forward?
Well, I think behind the scenes payments, anyone who can make payments more efficient, and there's a ton of energy and money going into that. I think the way we pull out cards and handing it back and forth is just sort of unsanitary. And it's interesting, like in Asia, they sort of, skipped a generation of payment technology and it's all done through phones. And I think that's coming here quickly. So anyone who can make that simpler is going to be in a good position to win. And I think in terms of making, it attractive to customers too, letting them pay however they want from Bitcoin, from their phone, that's just going to be a part of business right now that I think anyone who wants, that's sort of going to be table stakes going forward. It's going to be a challenge for other startups to come in because, right now it's going to be a battle between Coinbase and the banks and Facebook and Apple and Square and PayPal, so it doesn't leave a lot of room for tiny startups to come in. The action is going to be among the big corporates and in the government. But I think anyone who can sort of innovate and make this more approachable and easy to use is going to probably do well.
So if I'm a manager at a company who's not investing at all in cryptocurrency or blockchain currently, and by investing, I mean studying, putting resources behind it to figure out how it's going to impact your business, and I've bought into your case, how do I make the argument within my own company and where do I start? What's my first step in introducing this to management?
I think you want to sort of, start practically, because there's no shortage of consortiums and sort of consultancies that will come in to explain you blockchain for a lot of money and offer you a private blockchain thing. And you're probably as a manager going to write out checks for several $100,000. But I would start with more first principles. I tell people just get a Coinbase account, or if you don't want to do Coinbase, there's a company called Kraken or Gemini. And simply, work on it, find out how it works. You can also do it you can use Coinbase, which acts like an online bank, or you can get your own hardware wallet. Those things cost about $50 and you can store your Bitcoin yourself. And I think just let everyone try that and move it back and forth and see how it works. That's probably the best way to educate people about it. I think that's the first step, because this isn't going to go away. And to really underscore this, in the last bubble in 2017, Warren Buffett called it rat poison squared. Jamie Dimon said he would fire anyone for trading it for being an idiot and called it a fraud. And, those I think are probably the two biggest names in American finance. And now, their tune has evolved. Jamie Dimon still doesn't love it, but JP Morgan's using it. So, this is not going to go away. It's like when the internet came around. There's a lot of reason to hate the internet. It was full of scams. It was full of porn. It was full of disreputable stuff. But as a technology, I think it would have been foolish to say this is a fad. Likewise, blockchain and cryptocurrency is here to stay. So whether you like it or not, you have to learn it. And I think the more you play around with it, I think there's a lot of really cool dimensions. New tech is fun, just like apps and like cloud computing and like AI. This is, another of those technologies that's here. And rather than disdaining it or being afraid of it, try it. And then, make up your own mind of it.
Jeff, thanks so much for being here.
Allison, thanks for having me.
That's Jeff Roberts. He's the author of the new book, Kings of Crypto, One Startup's Quest to Take Cryptocurrency Out of Silicon Valley and Onto Wall Street. This episode was produced by Mary Du. We get technical help from Rob Eckhart. Adam Buchholz is our audio product manager. Thanks for listening to the HBR IdeaCast. I'm Allison Beard.